learn to survive without anyone, you can survive anything. Don't change your vibe to fit in someone else's life. In the end, some of your greatest pains become your greatest strengths.
And it begins with a person who desires knowledge, and with the pursuit of knowledge comes experience, and with this experience comes practicality. So, welcome again, my fellow scholars, to another day, and for today is our final day for the week. Hence, let's begin. First, as we know, always start with a fresh analysis on a daily basis. It puts out the biasness within yourself and it gives you mental clarity. So, given that today is the closing of Friday, let's just take a bit of a look on gold. Right now, gold on a structural manner is at the pinnacle of the heights, meaning to say it is still respecting this engulfing sell zone. And this is a short announcement. Our Engulfing Scholars platform is now online. All engulfing traders out there and all traders, come join in and connect with other traders across the world. Let's go. And it is still respecting this engulfing sell zone. So with that being said, now we know on this very level, 1962.78 is the lowest of the zone, and the highest would be 2068.40. So once you have a clear image of this, so now let's play the mental visualization game. The market is right now in here, and we are on the weekly level, hence it will need to take some sort of liquidity to bring the price somewhere. So for today, let's visualize the possibility at around 12 more hours when the market is closed. If you say it's red or green, where will it be logical to close? So now, for today there are three aspects that can happen. One is nothing changes, nothing moves, it just closes around the same area, 1993, 1984. So meaning to say it's just a 40-60 pips. But given the condition of the global economy right now, I do not think that is the case. So, with that understanding, we now know our mind is to look for somewhere within here and here. And when the market is starting, we are somewhere here. So, do we need to check 2068 now? No. So usually when I begin my analysis, I help my mind to be relaxed. So I take what I see. And on what I see is gold on a normal basis will not spike more than 300 pips up or 300 pips down unless some crazy magic happens. So beginning from this level, I will just move up 200 pips first, 220 pips, and then I would move 220 pips down. Why do you have to do this? This is how people do their analysis. A scientist does their analysis like this as well. It's called the method of deduction. You reduce your uncertainty first to what can be certain. So once you have done that, now we know on a Friday the minimum shit that you want to play with is H4. Don't go M1, M15, M5, fuck that. We want H4. So in this H4, what do we have to look? First, we have to identify. This is the size of the prostitute zone. And the other part is, this zone is no longer fresh. It has been playing for a long time. So I will know that if it breaks out of this zone, it will be very powerful because it will be the volume from today and the added confidence from the previous participant of this area. So, given that fact, I shall not play in a way whereby you risk your main account in here. Why? Because once the market starts going bullish, let's say it goes to 2006, we know that it's not going to stop there. Why? Because yesterday night, it already went to 2012 perfectly. So it will go way higher. So if one slight mistake, the minimum float of a whole could be 350 to 400 pips. And then that's not factoring what happens next week. Same goes down below. So once my mind is clear with this, do you see how I am now more relaxed? So, we use logic. Look at daily right now and what is potentially forming. On the left side, there is an engulfing by daily. So we just mark this area first, because we want to know what is the potential support around. And now, once we understand that this is the zone, let's look at where is it important at from the beginning of the price only. And now the price have tested this. And during the touch, it didn't just spike up. So this is showing this level is now weak. Why? Because this zone has been poked multiple times before. So this is where Mr. Wick's theory was the best of the best theories on wicks. So based off Mr. Wick's theory, this fucker will break below the previous wick at the very minimum. And once that happens, it might reverse or it might continue for the momentum first. That's why my critical H4 level is around 1952, because we know of the potential impulse that it will go down below. Unless you want to take the 20-40 pips here, sure. So that is on the sell side. What about the buy side? So the buy side is different. You cannot look at it from a daily perspective, because if we look from a daily perspective, it means we are trying to look for a daily buy. So now this is not even in a daily buy zone yet. The daily buy zone is below here. So that's why on a daily perspective, it will still look like a sell. But as a trader, you must get or be able to know the both ways first. So we have to filter down to H4 for this case. If this is the case for H4, what could be making it respond well? Is it this stick? No. Is it this stick before? Engulfing buy before? No. Why? Because it's lower from that zone already. So it will be somewhere along this guy. Engulfing sell meets engulfing buy. So this engulfing sell acts as a zone that creates a resistance, and this gives it a breakout. During the breakout, there is an engulfing buy formed. Hence, we can find the root of the location. So our main area to look for today is here, if you want to buy. So where is that? 1977, 1972. So in that area is where you can potentially buy safer. So as of now here, we only have this green box. If this green box can hold the weight of the next coming H4, then it will fly from this green box above. But if not, babies, don't be the idiots that trades in the middle. Wait for at least 1972. Yeah, 1972. Although the analysis says 1977, just look at the weight if it drops. But for me, if I want to buy, I will be looking at 1952. So that's why my preference is the sell, due to the potential long-term risk. Meaning, if the sell does happen, it can go all the way down below, because it took a very long time to come up. And like I teach you guys before, once the engulfing theory is formed, it takes lesser amount of time to go down. So that is still in the option of possible event. Hence, that's why Fridays are the days where people die. But for me, I strive in this market, because it just shows that a lot of people die is not because they can't trade. They just don't have the basic mathematical knowledge or understanding to calculate what should you lose. Because in their dictionary, they don't think about the losing side. So change that and you will change your result. Don't believe me? Do it today.